We know that income tax is vast and not very easy to understand. It can get simpler when you have answers to basic questions like what is Form 16? What are these particulars in Form 16? Why is my salary low in the months of Jan to March? And where is my money going? And that is exactly what we at ClearTax strive to do, simplify taxes and finances for you. Hello and welcome, I'm Ekta from Clear. If you want simple explanation on tax and finance, then do subscribe to our channel and don't forget to click the bell icon. Salaried individuals are always on the lookout for tax saving measures, but salary optimization is something they miss out on. If you want to know how to optimize your salary and save taxes, then watch this video till the end. Let us first understand some basics. What is assessment year, that is AY, and what is financial year, that is FY. Financial year in India starts from April to March. We are in the year 2022. Therefore, our financial year is 1st April 2022 to March 31st, 2023. And what is assessment year? It is the very next year where your income is assessed. That is, for financial year 2022, the assessment year will be 1st April 2023 to 31st March 2024. The income which you've earned in the financial year will be assessed for tax in the assessment year. Now let us understand your salary breakup. If you check your salary slip for CTC, you will find that your salary is made up majorly of these components. First is basic salary, which comes to around 30 to 40% of your total salary. Then comes house rent allowance, which is around 50% of the basic salary in case you're living in metro and 40% in case non-metro cities. Then comes leave travel allowance, books and periodicals, then meal coupons, and also special allowance. All of this put together will form your gross salary. From this, you can reduce tax exempt allowances. So when you reduce the exemptions, the remaining salary will become your taxable income. From this taxable salary income, you can further reduce the deductions like ATC, ATD, and various other tax saving investments which you may have done in the year. This will give you a net taxable income, and tax will be computed on this amount. Like we see here, we can maximize the tax savings by maximizing both exemptions and the deductions, which will be reduced from the income. So let us take an example and look at how these exemptions and deductions can help in tax saving. Let us consider an example and say you have a gross salary of around rupees 20 lakhs. Let us reduce the exemptions first. Let's look at all the exemptions. The very first exemption is house rent allowance. HRA is tax exempt only if it appears in your salary structure. You can use the HRA calculator to compute the exemption amount. The link is given in the description box below.
Find out the following components from your CTC: basic salary received, dearness allowance, HRA, and the total rent that you've actually paid to your landlord. Key in the annual figures, that is the 12 monthly figure. If you live in Delhi, Mumbai, Kolkata, or Chennai, select yes. Otherwise, select no. And then click on the button Calculate. You will now see the amount of HRA which is exempt from tax and also the taxable portion.
The next allowance is leave travel allowance. Your domestic travel ticket expense can be claimed as exemption. Leave travel allowance exemption can be allowed only for 2 years in a block of 4 years under section 10 subsection 5. Your mobile or internet reimbursement shall be exempt if it is used predominantly for your office use and also your bills are submitted to the employer. If you have children, then you can claim children allowance of rupees 1200 and hostel allowance of rupees 3600 per child per year. But you can claim these only for maximum 2 children. Meal coupons are provided by the employer on an amount which is calculated for 2 meals per working day. Usually the allowance under tax works out to around 26,400 rupees if you have a 5-day working week based on rupees 50 a day. Academic allowance can be claimed as tax exempt on any professional development courses or books that you might have purchased during the year. All you have to do is submit the bill and claim books, magazine, periodical allowance and also the academic allowance as a tax exempt portion. Gift vouchers received from employer on occasion of Diwali, Christmas, birthdays, etc. are tax exempt up to rupees 5,000. Anything beyond that will become taxable. You will receive a standard deduction of 50,000 and also professional tax. With respect to all the exemptions that we just discussed, you will have to submit proof of expense to the employer. Upon submission of the proof, the employer will calculate your tax exemption on these allowances and the balance will be your taxable salary income. Here's a practical example of all those exemptions and deductions. You will get a fair idea on how your salary structure will look like after claiming these exemptions and deductions and how much tax you will be required to pay. In this example, we are showing how you can pay zero tax on your salary income of up to 20 lakhs.
In this example, we have considered a gross salary of 18 lakhs, which includes all the components which we had discussed earlier. From this, let us reduce the exemptions. The first exemption will be of HRA. And here the exemption comes to around 3 lakhs. You can use the calculator to identify how much is your tax exempt portion. Then comes the LTA, that is leave travel allowance. You can claim the domestic travel expenses based on certain criteria. And then comes the reimbursement of mobile internet and fuel. You can claim the entire amount as reimbursement if you submit the bills. The next is children education and hostel allowance. It is capped at around 9,600 considering you have 2 children. Then comes the meal or food coupon allowance. It works out to around 26,400 per year if you consider 22 working days, and this is calculated for 50 rupees per meal based on 2 meals a day. Then comes academic development allowance. Say you've purchased any professional course worth rupees 2 lakhs. If you submit those bills, it will be entirely tax free. Then comes books, magazines and journal allowance. This will be exempt if you submit the bills. Then driver salary allowance is also exempt if you've used it for your office purposes and if you submit those bills. Next is gift voucher. Anything above 5,000 rupees will be taxable. So any gift value which is above 5,000 will be taxable for you. Next is a standard deduction of rupees 50,000 which is allowed to all the employees. And then also professional tax is deductible based on the state you reside in. After you deduct all these allowances and exemptions, your taxable salary income comes to around 6,56,600, from which you can further deduct your tax saving investments which you might have made during the year. Let us first consider ATC, where there is a maximum, that is the upper cap is of 1,50,000 rupees. Let's say you exhaust the entire 1,50,000 rupees, an optimal tax plan is suggested on the screen. And then an additional 50,000 is allowed. The next deduction is of section 80D, which is medical insurance premium deduction. Let's say you have a medical cover, then the premium paid on it shall be tax deductible. The limit is of 25,000 for you, for your spouse and your dependent children. And an additional limit of 25,000 is provided if you or your spouse are of age 60 or above. And also you must know that your insurance cover taken for your parents is also tax deductible. The limit of 25,000 applies, and in case they are of age 60 and above, the limit of 50,000 applies. You must also note that in case they don't have a medical insurance cover, then you can claim the medical expenses as tax deduction if you have those bills. The next is ATE, that is interest on education loan. In case you've taken an education loan, then the interest on that will be tax deductible for 8 years from the year you start paying those interest. And here this is 25,000. I have considered it as optional because not everybody uses this. So I have not deducted it from the total salary income. And next comes loss from house property. In case you've serviced a home loan, then the interest on that is tax deductible up to a limit of 2 lakh rupees. And this also again is not deducted from this income. This is just mentioned here for your reference. So the net taxable income after deducting ATC and ATD works to around 4,86,000. The tax on this above income will come to 11,800. You must also note any income which is under 5 lakh rupees, you will get a complete rebate, that is your total tax will become zero. So what you must aim is to bring your net taxable income up to 5 lakh rupees.
I hope you found this video helpful and you now know how to pay zero tax on your salary income. If you have any questions related to your tax planning, then refer to the links given in the description box below or leave us a comment. We'll get back to you shortly. Don't forget to like, share and subscribe to our channel and stay tuned for more such informative videos. Until then, take care and bye-bye.